Today, the Consumer Financial Protection Bureau finalized a rule requiring financial institutions to share customer data with other providers at the customer's request for free. The agency says transparency will improve competition in the space. And joining us right now with more on the new rule and much more is the CFPB Director, Rohit Chopra. Rohit, let's talk about this. What's the problem that this is intended to correct?
Well, Becky, it can be a real pain to switch your bank account or your credit card or other financial service. And what these new rules will do will inject even more control for consumers and competition in the market by making it easier to move your money, to switch, and to fire that bank or financial company that is not serving you well. The way it works is that consumers will be able to permission their data securely to the provider of their choice. And we think this will mean higher rates on their deposits, lower rates on their loans. And for young people who don't necessarily have a credit score or long credit history, they can use their payments and transaction information to show their creditworthiness. We think this is a big benefit.
This was my question. I mean, most of the time, this would be done just by a credit score. I guess I don't understand the problem with being able to say, forget it, I want to go over here and take my money here. If I'm opening a new CD, if I'm opening a new credit card, if I'm opening a new bank account. Traditionally, I don't remember it being ever difficult to do those things. How big of a problem is this?
Oh, well, if you talk to many consumers, they have lots of auto debits pre-programmed, or they have direct deposits. They have other places where their payment information is stored. This is going to allow them to be able to take a lot of that information and move it to that new account. Often when you switch your bank account, you put yourself at risk of missing payments to other loans, incurring fees, or dealing with other bureaucratic messes. And more importantly, Becky, when you're applying for a loan, often you want to be able to show that you've been paying your bills, that you have are earning a certain income. Yeah, credit score is one way of doing it, but for many people, especially younger consumers who don't have that longer credit history, this will be a way to digitally demonstrate all of the ways in which they are meeting their obligations. And on top of it, we have put into place some important privacy protections to make sure that there are not bait and switches where your data is being misused.
What are those privacy protections? Because if you talk to the big banks, they will tell you that they are very concerned about scammers being able to work their way around this. The banks spend lots and lots of money on security. What happens if a scammer gets a hold of this information? Who's held responsible?
Well, the way it works is this. Under our long-standing financial privacy laws, you get one of those notices every year that essentially tells you we're going to do what we want with your data. But under these rules, when you permission your financial transaction data, it can only be used for the purposes that the new company is offering. They can't go around and sell that data for some other purpose. And the reason why this is also important, it's not just stopping scams and fraud. We don't want your transaction history, Becky, to be used to change or alter the prices that you see on airline tickets and so many other goods. We know with artificial intelligence that data can be valuable, but we want to make sure it is not abused or misused either.
Yeah, but how do you guarantee the safety and security of that data when it's being brought up by a third-party app? I mean, the banks already do have secure APIs that have been developed so that they can transfer this information. This will require them to not go through those secure APIs.
No, that's not true. They would often use those secure APIs, and for the companies receiving them, whether it's another competing bank or whether it's a fintech, they too are responsible for making sure that data is secure and that the data is not misused. Now, we're going to need to make sure.
Yeah, how do you oversee that? And how do you make sure that and by the way, if that information does get stolen at some point, who's responsible for that? The bank that originally sent it or the fintech that picked it up?
Well, banks are responsible for securing data, and so are fintechs. You're right. We need to make sure that everyone is being watched to make sure that they are adhering to those standards of the law. But banks and non-banks alike are required to have data security standards to not allow those leakages. Now, we are urging, of course, all of the industry players, they need to modernize, too, their payment rules and other network rules that they control to make sure that we can take on where there may be frauds and scams, but certainly the CFPB and law enforcement will be living up to our role on that, too.
I mean, it just seems to me that there could be potential for additional fraud that's picked up along the way. I mean,
that will happen. That will happen in any circumstance in a digital economy. We have to make sure that there's some degree of rules, and at the end of the day, we should be embracing competition. We should use digital technologies to allow people to switch more seamlessly. When the FCC decades ago, they did one thing to allow you to port your phone number from one cell phone provider to another rather than having to change it. And it really made sure that consumers would be able to switch more seamlessly.
I understand, and that was a good move.
We want people to be able to port.
That was a good move. I'm a little more concerned about this simply because it's my financial information that's much more, there's much more riding on this than my phone number. There's fewer reasons to steal my phone number than there is to steal my financial information and get a hold of this. I guess my ultimate question is, if you're forcing the banks to share this information and that third party that is then sharing it gets hacked, who is responsible for it? Will that financial institution be responsible for it? Is it the original institution that you made share the information? Is it the consumer?
Well, Becky, right now, the way a lot of this information is being shared is something called screen scraping, where you actually hand over your username and password to a new provider to be able to essentially backdoor log in to your online banking.
Why don't you make that illegal?
That's what this is. That's what this is shifting that away from by moving things to more secure. Well, by moving things to more secure sharing, we're going to be able to sunset this practice of screen scraping. And one of the ways we are looking to make sure that all of this works is with higher security in ways that really make sure that the market is more competitive.
Right, but if the big bank says that this is a vendor we don't trust and we have some questions about, they are no longer allowed to say, no, we're not going to hand this data over. Well, my question is, who is responsible for that? If you're forcing them to hand it over, who is responsible for any fraud that comes from it?
Well, multiple parties could ultimately be responsible. It depends on really what's going on. Right now, when you hand over your payment information and it is hacked, you do have rights under the law to dispute those charges. And then banks and merchants and others, they set up their own rules about how they reimburse each other. We ultimately want to increase data security in the system, increase competition. And Becky, this is a way better system than we had in the past.